You know I try to be a good man, I always give it my best. But truth be told, someday I wanna go to the wild, wild west.
Hey, good afternoon. It's great to be here I have two very special guests here today. I have an agent realtor from the Twain County area, which is Betsy Hurst-Younger from Century 21 Wildwood. And I also have Michelle Gallagher, CPA, principal and owner of Clendenin Bird and Company in Modesto. We'll be talking about tax planning, business planning, and the new tax laws, plus real estate in the foothills and mountains with Betsy. You know, I consider this show to be about dreaming and planning. That's basically what they put in my script, but I really think it's about planning for your dream, right? If you don't plan for your dream and you go out and you get your house and you haven't planned for it, that dream could go away, right? So it's very important that you plan, you do the tax stuff you need. So tax planning and business coaching would be part of that plan, which is why this show, Real Estate Jerky, exists. We know that home ownership is the first step to build personal wealth, which is one of the biggest benefits for living in the United States of America. So let's get to know my guests. Hey, Betsy.
Hi there.
How you doing?
Doing great, thanks.
Hey, thanks for coming down.
It was fun.
Take an hour or something to get here?
Oh, a little over an hour.
Yeah, well, it's not too bad. I do it constantly.
Yes, I know.
Because I go up there at the end of the week. And we've been working together, I was asked this, it was 5 years?
Oh, at least.
Right?
Yeah.
Or 6 years. However, so when I first went to buy my cabin, I found you for I was doing some work for some REITs, and basically you found our cabin for us.
Right.
And then since then we've been working together.
Exactly.
Right?
Doing lots of loans.
Anything else you want to add to that besides lots of loans? I'm just kidding.
So it's helped a lot of my friends and my family.
Yeah, it's been amazing. One thing I like about working up there is it's how it used to be. Everybody's nice. It's a totally different way. The hustle and bustle isn't so crazy as it is down here or over in the Bay. Wouldn't you agree?
Oh, I totally agree. In fact, my husband doesn't let me go grocery shopping. He has to do the grocery shopping because it takes 2 hours to get through the store.
Well, that's because everybody knows you and you know everybody. It's like you get stopped every other step.
It's okay.
And then Michelle, how you doing?
Good.
And you must be very happy that the tax thing's over as of a couple, this last week.
Yep. Monday was the deadline, and we're very happy it's over. Finally get to take some time off and not be working 12-hour days.
That's great to hear. Now Washington, D.C., they get an extra day, right?
Yeah, Massachusetts has what's called the Patriot Day, so it's a holiday. And it used to be like that for the whole United States, but this year they decided to just have the two states, Washington, D.C. and Massachusetts, have that extra tax day. So we all got to file, thank God, by April 15th. So we didn't have to work an extra day.
So then people brought you all the stuff on Sundays.
Correct.
Hey, can you get it done by Monday for me?
Absolutely, because I can turn it around in a day.
Well, it's got to be much easier this year, with the new tax plan.
Of course it is.
But, we can get into a little bit more than that after. Let's find out a little bit about you, all right?
Okay.
Betsy, do you know where Michelle was born and raised?
Oh, she said she was born and raised in Mariposa.
Yeah, that's correct. Is that correct?
That's correct. My parents both worked up in Yosemite Park for the concessionaire up there. We lived in that little town called El Portal, but we went to high school in Mariposa and did sports there. So we were there my mom finally moved, I think, in 2001. So she was up there for over 30 years.
Wow.
Yeah.
How long you been gone from there?
Well, I went to Stan State for college, and so I kind of left there and only went back once for a summer, and then I've been pretty much in the Central Valley ever since.
Wow. How long you been in Twain County?
Since 1992. Moved there because I wanted my kids to be able to be safe in the front yard and raise animals. We were going to be part of 4-H. Yep.
And how's that work for you?
Well, now I've got 8 dogs.
How many grandkids?
2 grandkids and 3 kids. So
wow.
I moved up with 2 kids and had another one after that. And they've been very active in all the different types of sports and skiing. And now the grandkids are here and 6.5 and 8.5 years old.
Where were you before Tuolumne?
I lived in the Bay Area for 2.5 years in Alamo. And before that, I lived in Morro Bay for 10 years. And I actually went to Cal Poly. My ex-husband was a building contractor, and we borrowed out student loans and started flipping houses and paid off our student loans and started making money and moved up to the Bay Area after accumulating several investment properties. And before that, I was raised in Anaheim Hills.
Wow. So you're about the only one that's paid off their student loans.
Yes, we did.
Probably.
Now I just have kids with them.
Because I know most people have gotten them and then they used them for living expenses and never paid them off.
Right.
And that's,
Exactly.
the one debt you can't bankrupt.
That's right.
Yeah. All right. So let's get to know Michelle a little bit more since we got everything about you. Why'd you decide to become a CPA? What drove you to do that?
Well, I knew I wanted to do something in the business degree area, and just kind of looking at all the marketing and the managing and all that kind of stuff, it just didn't seem to fit. I was always good in math, the typical answer, but it's more about problem solving and helping people when you're in the accounting department. If it's the business that you're in, or if it's like me as a CPA, you're helping a lot of different kinds of people in different businesses. So that was attractive to me in terms of being able to kind of see the numbers and kind of help people understand what those are, and basically how that affects your business and so on and so forth. So it's like the middle of the business, and so that just
Right, because you do more than just taxes.
Right.
So what do you do?
So we do obviously all of the taxes in terms of corporations and estates and trusts. We also do nonprofit tax returns, which are fairly difficult. But we also, like on our off season, we have audits. We do audits for city governments and for nonprofits. We also have a whole other department that deals with just the accounting part of our small businesses, if it's anything from running their payroll to actually writing their checks and making their deposits for them. So we kind of have a wide range of that. And then we also do political campaigns. There's a significant amount of reporting that goes involved in terms of campaign reporting. And so we have another niche on that area too, where we do that.
Does campaign side of stuff get audited a lot?
We haven't seen a whole lot of audits.
I mean, in general.
No, not that I'm aware of. That's not my area of expertise in terms of our firm, but we haven't had anything audited.
No, I'm not talking in general, like your
Yeah.
farm. I'm just in general.
Yeah.
Do you have any questions for her there, Betsy? Because you
No,
deal with CPAs. You have
I do, and I've
you have
also
tax
served
issues.
on several boards for nonprofits, and I know that they have to come and do different reporting and,
Right.
and just kind of be part of the update on giving the board their update for finances.
Yeah, we do those audits where we basically come in, kind of check the finances, make sure they're following the rules of their contracts, and following the accounting rules and regulations. It's called GAAP or FASB. And so we kind of test all that and make sure that they're doing that right. We're making sure there's adequate controls in terms of nonprofits, because obviously it's not their money. It's other people donating money, or it's government money, and they need to make sure they have adequate internal controls to make sure that fraud is being avoided, or at least proactively not. They're aware of it and they can take care of it.
So why do our listeners need a CPA?
That's a good question. One of the audits that I was on with an IRS agent, she told me the number one audit is self-prepared returns. So she said people just don't understand what they're doing, or if they think they do, the software doesn't do it correctly, and so on and so forth. So A, it's to avoid any kind of audit situation. B, you want to make sure that you're getting the most deductions that you can, because a lot of times when I see self-prepared returns, they don't understand the tax law, so they don't know what they're entitled to or not entitled to. And that's where we come in and make sure that they, get as much as they can. Where if it's you're doing it yourself and answering the questions on TurboTax, you might answer them incorrectly and not know it. And so that's a really good reason why to use a CPA.
I'm glad you clarified that, because there are a lot of people in our office that recently have been saying, why don't you just input your own information? It's a lot of information. And
It's
if
a
you
lot
don't
of
get it right,
information, right? Yep, I've had that's like I said, the IRS agent gave me a ton of stories of self-prepared returns and what people thought they could get away with or not get away with, and
it's worse for somebody who does a Schedule C self-prepared, right?
Right. Absolutely.
Because they're going to look at that
Big
more.
red flag.
Yeah,
Yep.
and that's what they're looking for, is those types of returns, right?
Right, because they're easy to target them in terms of, okay, well, you did this wrong, we're going to charge you, and then they don't get a help to figure out if they're right or wrong, and the IRS will just get their money and be done with the audit. So, yeah.
So bottom line, go through a CPA. So if you do get audited, you have someone there to help
Right.
you, and you're
Exactly.
more likely to win.
Right.
I'm not saying you're
Exactly.
going to win, but
Well, I mean, it'll be less damage, if anything. So.
Of course.
Yeah.
Yeah. All right. So we're going to take a break real quick. So let's pay some of our bills around here for our advertisers. When we get back with Michelle Gallagher, CPA with Clendenin Bird and Company, and Betsy Hurst-Younger, Realtor at Century 21 Wildwood up in Tuolumne County. Remember, if you have questions or comment, you can dial pound 250, say the keyword Real Estate Jerky, and then you'll get into us. Leave us your questions or comments on Facebook or on Twitter, and we'll talk to you when we get right back. All right, bye. Easier said than done. Anyway.
Okay, so is everybody going to think I'm an idiot for flipping houses with student loans,
No,
or
who
that's
cares?
just creative?
That's just creative money.
Yeah.
It doesn't matter what
paid it
people
off.
think.
I
Who
mean,
cares?
You paid it off.
And don't worry about your hair. Just put your thing back on. You're gonna mess it up again. What you can do is just move that one off like this so you can hear. That's what I usually just
We usually
keep
do it like
on,
that, but I didn't want to
keep
do
it
that
on
on
and do
camera.
this. And then put it on when we're ready to go.
Yeah.
12.
I'm sorry?
Next will be 12.
All right, give me a sec. All right, so when we come back, let's see here. All right, so I'll bring us back. Betsy, chime in if you hear, ask some questions. Just because it's on here and it says Ed doesn't mean you can't ask the question, all right? I want you to be more involved.
So I've been audited before by the
Have you?
IRS. Yeah.
Do you want to talk about it?
Yeah, I can do it. I'm
of
okay.
fun.
My life's an open book.
Well, it's been,
Yeah, it's been several years.
Yeah. I want to bring up those people. I remember the husband and wife are filing separate returns. One's doing head of household, one's doing single. Remember kind of that I was telling you about that, huh?
Was that this year?
Yeah, I was just talking about it, and
Okay.
Justin was like, "Hey, did you see that? It's blah, blah, blah," and they're filing wrong because they're doing single. They're married, but he's filing single head of household, and she's just filing single instead of being married, filing marriage.
Well,
returns.
there is a way to do it that way, but there's just you have to not be living together.
No, they live together.
Yeah, you can't do it that way.
Yeah, they live together. And the reason I found out they do it is because she has an old lien that would take his money. She's paying on from when she was married before, and he doesn't want to pay for that. Well, why don't you just
Sure,
file
sure,
and pay for it and move on and get it
Yeah.
back?
Yep.
All right. All right, we're ready. Just point at me when to go.
Long-lasting real estate jerky is back on Power Talk 1360 KFIV.
Hey, we're back. All right, Michelle, I guess this season with the new tax laws, it probably felt a little different than normal, a little crazier. Yep. What was that like for you? Can you explain how things worked for you at your end, and how did you interact with the IRS? And also, again, why do we need a CPA with the so easy the tax laws?
Exactly. They decided to, shorten the form to be one page, but then they also attached 6 new schedules. So it made it even more complicated, and the fact that California didn't change a darn thing kind of made it to where we were basically still doing the return the same. It just may have turned out differently on the federal return. With that, we had pretty much a year to kind of get through the new tax law changes, so we did a lot of continuing education and scenarios in terms of how that was going to work out. And it was a lot of explaining to our clients the changes, a lot of misconceptions on numerous deductions in terms of what they could take and what they can't take anymore. And so that was a lot of that. We had a lot of issues with the withholding tables that were changed last year. They didn't withhold enough, and so people were either owing or had lower refunds. But pretty much everybody benefited in terms of total tax paid in. They did have lower tax rates, so they did pay in less if situations would have been the same, from 2017 to 2018. So it was just a lot of that. And then with the new qualified business income deduction, it's a 20% deduction on net business income for anybody other than a C Corp, sole prop, S Corp, partnerships. And doing that calculation, was a whole day class and figuring out how to get that done and make sure that software was calculating it correctly. And so giving that, and that was a big benefit for some of my clients.
And after that 20%, you still get to itemize.
Yes, it's a calculation done based off of either the lower of your net income from your business or your taxable income, and it's 20% off your taxable income. So if you made $100,000 on your business, you could potentially get a $20,000 taxable income reduction.
Sounds good.
Yeah, so there's a lot of real estate agents out there who They do a lot of business, and used to be, hey, if you do make over $100,000 a year, you should incorporate or LLC, one of those things.
Right.
Is there a number now that if somebody's making that they should incorporate, or should they just, and I'm talking even a C or an S. I know this is outside of our normal realm, but
right. Well, typically my advice to our clients in terms of incorporating is looking at the tax savings that you could get, because if you make, because with a sole prop, you have to pay Social Security and Medicare taxes, which is 15.3%, basically, roughly. Well, if you incorporate and become an S corp, then some of that $100,000 that you're making will then become wages for yourself, and that's the only SE tax that you're going to pay on. So, say you only take a $50,000 wage, you also have an opportunity to take distributions like a partnership, or as if you were a sole prop, and that's not going to have the Social Security and Medicare taxes. So that's the main reason in terms of incorporating. LLC is a partnership, so it's basically the same in terms of taxability. But we also have to look at the other side of liability protection. Like, what's the likelihood of you being sued? Do you have other entities, rentals that you need to protect to make sure that, things don't cross over? So there's a lot of factors in determining whether to incorporate or to become an LLC.
Betsy, you have any question on that?
Well, I just recently went to my investment guy at Edward Jones, and it kind of hurt me that I was a stay-at-home mom with no income for several years, and then became self-employed, and now I'm trying to pay in so I can actually get retirement and plus save with an IRA.
Right.
Yeah.
Right. Yep, absolutely.
And the SEP IRA is the one where you can max out.
Yeah, the SEP IRA is probably the best avenue for retirement. I mean, it's a good whopping like $55,000 or $60,000 that you can put in there as a self-employed individual. So, it's better than a 401k, which is only $24,000 for the older people. There are matches from companies, but you're never going to get that much like you would with the SEP.
Correct. Yeah.
So on the SEP, it goes off of so up to 60. So, but is that a percentage of how much you make? So
yeah. So it's basically 20% of your net profit off your business. So if you make $100,000, you're entitled to put in $20,000.
So if you make 300, you can put the max.
Max. Yep.
Yeah. Let's see here. I have one question. So, there's more. Homeowner deductions, right? Okay. I read an article that said there was less people who bought homes this year because of the change in the tax law and the homeowner deduction when it comes to interest.
Right.
And so do you want to explain that, how it's different now?
So the difference now is if you're a married filing couple, your standard deduction went from basically $12,000 to $24,000. A lot of people would go over the $12,000 in itemized deductions, which are your mortgage interest, your property taxes, your real estate taxes, your state income taxes, charity, all that stuff. So there was a limit on the amount of state income tax, real estate taxes, and DMV registration. It limits to $10,000 now. And then the mortgage interest gets limited on new loans that started in 2018. To up to the first $750,000 of debt, of acquisition debt. So a lot of people have been kicked out of being able to itemize because of the limitation on the state income tax, and a lot of people, especially in the Central Valley, mortgages are not thousands and thousands of dollars a month. So a lot of the married couples have been not itemizing unless they're have a huge charity donation. So that's basically what the difference is. But then California hasn't changed a thing. So people who were itemizing previously are still itemizing for California.
Under the state form.
Correct.
For your state taxes.
Yeah.
So do the new tax laws affect the amount you can donate to a charity?
No. It actually has gotten better.
Okay.
The law that changed there was, the original law was you could only deduct up to 50% of your adjusted gross income. So if your adjusted gross income was $100,000, you can't contribute or can't deduct more than $50,000 in charitable donations, which is really rare for people to do it like that. So that's changed to 60%. So there has been no changes to the charitable donations.
So you can still give more.
Right.
Okay.
Right.
Business or individual, or is it different?
No, on the business side, the business side has pretty much stayed the same in terms of the C Corp. So when you're an S Corp or an LLC, your donations are still just run through you as an individual.
Okay, so if you had an S Corp and you donated, that would be just like you're doing it as an individual.
Correct.
Okay.
So as a self-employed person, it's better to call it a donation instead of a gift?
You need to try and call it advertising. So
marketing and
advertising. So if you can get a sponsorship or something like that, where you're getting your name on something where it's being advertised, that's the way to go.
So that's a marketing then,
right?
Gotcha.
Because now you have logo on something, you're promoting yourself through that.
Jogathon T-shirts at the elementary school.
Yes,
Right.
that, or if you do, like we had Ride for Mom in here. If you do stuff on there, you can be on their stuff, and that's no longer a donation. It's marketing.
Right.
Right.
Now we were talking about homeowner deductions. Now I know in the past, so if you had a rental, that stays the same, right?
None of that has changed. Yes.
So
that has all stayed the same. It's 100% deduction on the interest, even if it's over $750.
Now you might not know this, but on real estate agents, right, or they can deduct differently, right?
Yes. So if you're a real estate professional, so if you're a broker or a real estate agent, if you have rental property and lose a lot of money on it, you're not limited as you are if I were to own a piece of property and actively participate in running that property, but it's still what's called passive income for me. So I can only deduct up to the first $25,000 loss, depending on how much other income I have. But for real estate professionals, for the federal side, you're not limited to that. The state of California still limits you, but for federal purposes, if you're a real estate professional, you're allowed to take 100% of that deduction.
And a loss isn't considered your maintenance costs or your improvements like new heaters and things like that.
Right. So those things need to get amortized or depreciated over time. There are some rules on, if it's not a significant amount like a roof or something like that where it's going to last, 15, 20 years. If it's only going to last 5 or 7, there are some rules where you can take 100% deduction on those.
Like a hot water heater.
Right.
Okay. Because that's not going to last forever.
It's called a bonus depreciation. Yep.
So this is why you need to see a CPA.
Right.
That's correct.
And so what is the difference between a CPA, an enroll agent, and a tax preparer? Because I know a lot of people go, I went to my tax preparer.
Right. So I had to kind of look this up. There's 5 categories when we have a power of attorney. And so like a CPA, my license, I had to go to school for. I had to get 120 hours of education. I had to have 500 hours of auditing experience and then take a very rigorous exam. And so once I passed that and passed an ethics test, I became a CPA. I have continuing education I have to do every 2 years to keep up my license on certain things. An enrolled agent doesn't have to have a degree, an accounting degree or any kind of degree, but they do have to pass a pretty rigorous test with the IRS. They can do exactly the same thing I can do with the IRS in terms of representing individuals and so on and so forth. A lot of our classes, though, that we take, the enrolled agents, because they're focused on tax, where my stuff, I go all over the place with accounting and auditing. They're really well versed in it. So EAs, depending on who it is, they teach a lot of those classes. And so an enrolled agent is
really good for tax.
Right.
Okay.
Really good for tax. So, and then a tax preparer is also something where there's a test taken and a fee done, but it's more of a basic comprehension exam. I think a big named outfit can make you a tax preparer if you take their class or something like that, but it's definitely not as rigorous as an EA. And
so the knowledge is not basically there as much as
potentially, yeah.
Okay. Did you have any questions there, Bets?
No,
Because you're so quiet today.
I'm following it. I worked for a guy that was a tax preparer before. I never had to take a test, and I know I was taking information for him. That was back when I was probably 20, 21 years old.
Was he just a tax preparer, or was he an
think
enrolled
so.
agent? Okay. Yeah, because anybody can be a tax preparer if you can pass the basic exam.
Right.
And then the basic exam can be given by a company.
I'm
Or
not
does it
really
like-
sure how they do that, because I know that they're in the thing. It says, yeah, it just says take a basic exam.
But it doesn't say who puts the exam
Yeah,
on.
but like with an enrolled agent, you have to go to a testing
Right.
center, and the IRS is the one that actually provides the test for the enrolled agents.
So the enrolled agent is really rigorous for somebody who wants to get their taxes done.
Right,
That would be the
focus on
perfect
it.
person because they're focused on it, right?
Yeah,
I'm not to say CPAs aren't, but I'm just saying.
right. It's just because sometimes there's a misconception that the CPA is better than an EA, quote unquote.
Right.
But an EA has just as much in terms of knowledge and education if you find the right one, because there's always bad seeds in every.
Right. Well, hey, let's go out to a break real quick. As a veteran myself, I think it's important to support our military family members, and we always honor veteran business owners during the show. If you know a vet that could use some free advertising, please message us their name and number to pound 250. Say the key phrase, Real Estate Jerky. And this week, we're giving a shout out to Kyle Helton from Drain Master, serving Stanislaus in San Joaquin County. Number is 209-594-2074. We'll be right back. Sorry, I couldn't read. I have a staple in the number.
Huh?
There's a staple in my his number.
In the middle of the phone number?
Yeah.
Oh.
All right, Betsy.
That was good though.
So what happened is we'll come back. When we come back, because you're going to bring us back in.
Okay.
I think. Or is it you?
Yeah.
Okay. All right, we good? We doing okay?
Yeah, I just want to make sure I got what I want in here, and then
Give Marlene a couple more seconds. All right, yeah, you are bringing us back.
Let me-
Bets.
let
So
me
I'll
get-
say,
let
hey,
me-
you want to bring us back into
let me
the
get
show?
one more of you, Ed. And I get smile, please. Thank you.
I don't smile.
Yes, you have to smile sometimes. All right, thanks.
Don't happen.
You can't make me.
Ain't gonna happen.
Red says the same thing, my husband. He's got the little Manhattan space.
All right, so you know what you're going to say there, Bets?
Yep, and
All
we're
right.
going to talk to Michelle,
Yeah, well, no, bring us back. Yeah.
and I'll go ahead and talk about a little bit
So
about my
I'll
audit.
when I'll start it, and then I'll say, hey, Betsy, you want to bring us in, and then I'll let you go. All right, we're ready. And Michelle, you're doing great. And Betsy, you're doing great. It's easy. Nothing
It's
to it.
not that hard.
Get your serving size of real estate jerky on Power Talk 1360 KFIV.
Hey, Betsy, you want to bring us back into the show?
Sure, we're back. Talking to Michelle Gallagher, CPA. I've got to bring it up, Michelle. What about an audit? I've been audited in the past, so I know what it's like. And what about now? Will the new tax laws make it so we're more or less the chance of getting audited?
Well, I think it's going to shift in terms of what's going to get audited. So individuals now, with the itemized deductions going up so high, there was a lot of audit risk with the unreimbursed employee expense. All of those people are going to pretty much, it's going to go almost to zero probability. If you're a small business owner though, or have an S corp or an LLC, I think they're going to shift. It's just my opinion, but I think they're going to shift it over to that because there's a lot more area for planning for us now with this new qualified business income deduction. So I think it's going to shift over. But I think I did read somewhere when this whole thing came out that the auditability of people are going to go down.
I know when I was audited, people were telling me, oh, just bring the bag of receipts and drop them, pour them out on the lady's desk. And I just kind of went, what? And so I went in as organized as I could be. And it was actually over in half the time that was allowed. And it's just, if you're just nice and, I had lost a house and the lady who was doing my audit had lost a house. So we had something in common.
Right.
She knew Tuolumne County. She knew it wasn't unlikely that I would drive from Pinecrest Lake all the way down to Don Pedro in the same day. And mileage was an issue.
Yep,
And
mileage is always a big issue, but yeah.
yeah, and keeping track of it.
Yep.
And one of the ways I found, if you go to Jiffy Lube or one of those type of businesses, and they keep track. You just go and
They
ask
do.
them for, your list of your maintenance, and they'll say your mileage right on there, and it's
Right.
proof for the IRS.
Right, that's what my auditors have accepted in the past. Something about the beginning of the year, got your oil change, and then practically at the end of the year or sometime soon after. And she has taken that as here's what the mileage is for the year, and it's reasonably estimate how much mileage you do. If you're a real estate agent, you're going to be driving a lot. So a 60-70% mileage for business doesn't seem unreasonable because the IRS has to give you some kind of reasonable estimate. They'll have to allow you to reasonably estimate some of this kind of stuff. But nowadays with apps and everything, a lot of my clients are using the mileage apps where they basically just turn it on at the beginning of the day, and then at the end of the day kind of figure out which trips were business and which ones weren't, and IRS will take that as well. So.
I always thought it was great to be able to pay off your car. And being self-employed, that was the last thing I wanted to do because that eliminated a lot of deductions for me.
Yeah, it depends on how you do it. If you do actual or mileage, but
So leasing
yeah.
a vehicle is better.
It depends. It depends on if you're going to get rid of that car in 2 years or if you're going to keep it for a long time. There's tax planning of you buy a car to save a huge deduction in the year that you buy it. So that would be one reason to do it. But if you're going to keep the car, leasing might be the way to go.
Do you have any funny stories you want to share?
Well, I was saying with the IRS auditor, she's saying that the self-prepared returns are really the easy ones to kind of go after. She had one where the gentleman was a retired police officer, and he was then now working for a security place, and he was there only a short time, and I think he had like a $3,000 W-2 is what she said. but he ended up trying to claim like $6,000 or $7,000 unreimbursed employee expense.
Like uniform and that kind of
Right,
stuff.
exactly. And so she, it was pretty funny. And then she also said, people would come in and say they would sue the tax software because they did it wrong. It wasn't the person, the individual was not doing it correctly, and that they would sue the software company and all this stuff and be very adamant about it. So yeah, it's kind of funny what the IRS agents have seen over the years.
I'm sure they've seen a lot.
Oh yeah,
Yeah.
Definitely.
yep.
Nothing to say else there.
I know.
This-
I'm just
no, this is
thinking
pretty
about
easy.
my taxes that I
Yeah.
haven't done yet. I had to do an extension.
Extension, right?
Well, most people
Exactly.
do, right?
Wrote the check, did the extension.
Oh, at least you wrote the check,
Yes.
right?
Exactly.
What happens if you don't write the check?
There's penalties and interest. I mean, the most important thing is to actually get the extension done because it's a 25% penalty on the taxes that are owed if you don't do an extension or don't file on time. So filing that extension is really important. But paying that amount on April 15th will avoid the underpayment penalties if you were to have to go on extension. So there's different.
What are the underpayment penalties?
It's like 0.5% for the first month. It's like a scale, and once you get over 6 months or something like that, it goes up to it caps
Like
at 5%.
Oh, okay.
Yeah,
So, like, if your credit cards are at 24, it's better to pay 5% to the IRS.
right. And the interest rate is 5% with the IRS too. So.
Well, isn't there also a penalty if you don't make all your estimated payments?
Yeah, there's several different kinds of penalties that they can assess you with. If you're a Schedule C filer and are supposed to be paying estimates and don't, then they can charge you. This is how much you should have paid us this quarter, this quarter, this quarter, and they can calculate that penalty on you too.
So if you don't get your taxes actually done until October, you've missed.
Now you're talking if you didn't make the April 15th of the year, you're a year and a half late.
Yeah, I've made one of those, and then there's also one in June.
Yep.
Yeah.
April, June, September, and January. State of California is only April, June, and January.
Okay. It's important to do that.
So I had a client I was doing a loan for, and they have a home in Southern California, right?
Mm-hmm.
And she got it in the divorce from her ex-husband.
Mm-hmm.
She has a person in there, we'll just say maybe her ex-husband, and he pays her the money, right? And she then pays the mortgage payment. Somebody like that, should that be written off should that be shown on your tax return besides the interest write-off, but should you show that as rent if it matches the payment, taxes, and insurance, or is it not necessarily
Not
rent?
necessarily. Not necessarily true. I mean, a rental is truly somebody else living in the house, and you're not in it.
She's not in it.
Oh,
she's
she's not
living
in it.
up here.
Okay.
The person who's in it is her ex-husband, who
Right.
he didn't get the house.
Right.
She did, but
Okay.
he's just renting there
Right.
from her.
Yeah. It kind of depends, but in reality, she probably doesn't have to pick it up as a rental income. Is she going to take the deduction for the mortgage interest?
She does a deduction for interest.
Right. Yeah.
Because it's her house.
Right.
So, I mean, because for us, when we want to go ahead and say, okay, it's a rental and here's the rent that's coming in and this offsets the payment, right? They
Right.
can use up to 75% of the money they receive to go towards the payment, and that's how we can get rid of it. We have to show that it's been it is an actual rental on there, not just
Right.
deducting the interest, but it has
Right.
to be an actual rental.
Right.
And so I was being told by the lady, I was like, I can't do it unless you do this. Well, she was being told by her not tax person, but sort of financial planner that if she did start it, because it's been 4 years, she would get audited. And it
depends.
would raise her income.
It might. I mean,
But it could- you also get the
decrease it too.
right.
If she's got deductions, they can
Right, the
take that are
depreciation
gonna-
of the house and other
Exactly.
stuff like that.
Right.
Can she
Yes.
deduct going and visiting the house, even though she might not want to visit it?
If it's a rental, yes.
It
If it's
is.
a
Only
rent-
if it's on her.
right, as a rental,
Okay.
going to visit the home is part of taking care of it. So yeah.
Yeah. Well, and then I also know, and you probably don't know this, but when people own a home sold and separate property, this is probably an attorney question, but I was told that in California's community property state.
Right.
So truly, for someone to be sold and separate, you have to never have visited, never been there, never watered plants, nothing. You know anything about that, Bets?
No.
Oh yeah.
No,
So
I
I
heard
mean,
that
just be careful if you're doing something sold and separate that you talk to an attorney and make
Right.
sure that it's.
Yep.
If you're going to get married and you have properties, you might want to think about a prenup before you get
Right.
going, just to
Exactly.
protect everybody.
Yep.
All right. Anything other this year with all right. So what you saw this year with the tax plan, how should people proceed forward to protect themselves? Is there something you like, okay, we got to do this for sure?
Right. Well, like I said before, the majority of my clients, we really have to look at their withholding and adding more to it, because I've had people claiming single zero and still not have enough withheld. and they were owing when they weren't
Really?
supposed to be owing. Yeah. It also depends on what other kind of income they have, if they've got, investment income coming in and so on and so forth. But I've had numerous W-2s come through where the person made $106,000 the year before, but then made $116,000, and their withholding was less than the year before, like $2,000 or $3,000. So, sometimes it worked out okay, but I have a couple clients that are going to be coming back to me in a couple months once they've changed their withholding to kind of see if we did it okay. But it depends on your other kinds of income. But that's the biggest thing, is if you are struggling with that withholding issue, then that's the one thing that we are doing. With the businesses, it's balancing how much wages they're doing, because there's another calculation on this QBI that goes through if you're an S corp and you're giving yourself a wage,
Right.
kind of balancing that out, because you're not going to get the QBI on your wages from your corporation. You're only going to get it on the net income on the K1. So there might be some tax planning around that as well for my business clients.
So what? So I some of the stuff I was reading beforehand, they were talking about you might want to do later in your company business coaching, or do you do other things?
Well, what we want to get into, we've always wanted to kind of grow our business in terms of the year-round services for our clients. We have some clients that they kind of need us to come in either quarterly or monthly, make sure that their books are looking okay, because they're a disaster at the end of the year, and it takes hours and hours and hours of cleanup. And so that we want to kind of get in there and be proactive about getting their accounting in order, because it's really important. I mean, like you said, with the IRS audits, if you have a clean backup and everything looks good, they're going to decrease their risk in terms of the audit, and it shortens the audit time. So it's really important to kind of do all of that up front.
So the more prepared you are for your audit, the better you are in your audit.
Yes.
Shocking.
So I switched over to QuickBooks this year, and it's interesting the way it puts its own categories on what you've got as your entries. And I had to literally go through the entire year and create my own categories, because I needed it to match what my taxes were,
Right.
and what my deductions were.
Yeah, QuickBooks is a great tool for businesses, but it's easily, you can mess that up quite a bit. We do a lot of QuickBooks trainings for our clients as well, so because it's a good tool, but it's something that you need to be trained on.
Well, and it's really easy because you don't have to do the manual entry anymore. You just
You mean-
auto-populate it from your checking
download
account.
it from your checking. Yep.
Yeah.
Right, and then when you make one in, you can do it again much easier, right?
Yep.
And then, so basically, people should get now. We got to go out to a break here in a few seconds. So, Betsy, you want to take us out to break?
Sure. Thank you for listening to Real Estate Jerky. Ed must have been a beef guy at one time. Where else would this show's name come from? I'm Betsy Hurst-Younger, Realtor with Century 21 Wildwood Properties up in Twain Harte, California, visiting Ed today. We'll be right back, and I'll share some of my great mountain properties with you.
All right, talk to you when we get back.
Thank you. I hadn't read the part about beef.
You have two lines on this thing. You're supposed to memorize them. Right, so that's one's going to probably be 9 or 10 minutes. So basically,
Am I doing okay?
We're doing great.
Okay. I was trying to
There's
think
no
of something
bad
I could
stuff.
ask her.
It goes by
Yeah.
fast.
I told you this.
Goes by fast.
The first show was like,
Oh, man.
yeah. Oh, you're live. And
Oh, yeah.
give me a second. So the next segment's 10 minutes. So in the last, so we'll go and then we'll have a minute left, and then I have to say this whole thing. It takes about 40 some seconds. So I'll say, hey, we're getting close to, we have about a minute left. If you want to say goodbye or whatever, you got about 10 to 15 seconds to say it, both of you. Or I'll give you a little extra, but that's pretty much how it works. All right, so when we come back, so what does it say we're coming back on here?
So the thing about that trip that I won,
What trip?
It's
I don't
actually-
know anything about it.
okay, it was actually at a Century 21 convention. They pulled my card out of a fishbowl, and I won a trip for two to the Women Who Rock concert.
No, really?
Yeah, and
Oh,
she
is that
wanted
what
me to
this
tell
is?
them about that.
Oh, here it is.
It's not AAUW though, but I was promoting AAUW to the people at
Gotcha.
the booth.
So blah, 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 blah. Unless Betsy describe your listings, Ed Chapman, some real life stuff, blah, blah, blah. Hey, Betsy, here, guess. What's the best thing? Oh, yeah. So what we normally do is, normally we'd start the show with what we're ending the show with. The other agent I had for 6 months on this thing decided to quit because we weren't really got in a fight. But anyway, We'll just leave it at that. And so we would start off with the whole listings and everything else. So she's like, why don't we change it up and do it this way? And then that way we'll do it at the end and it'll close it up and it'll bring everything together. So that's why we're doing it this way.
So when she was talking about the listings, was she telling where it was and how much it was? And
she was kind of giving just the address, and she would say, like, the best thing she loves about this property is, so they call you. You follow me?
Yeah.
You don't want to give them everything. You want them to call you.
Well, because I put different lakes listings in, so I was going to talk about that.
She wanted to know about all the listings, what you want her to say about her
I want you to
address.
sell it.
Okay.
Please do not read, oh, it's got 3-bedroom and 2-bedroom. And like, I'm not excited about that, and neither will anybody else be. So sell it.
So it was just around the corner from a lake?
Yeah, and I
Walking distance.
Yes.
Right.
And
Get on a small bike ride.
what you sell it.
You don't ride bikes up where we are.
Sell it.
You're right.
Yes. Both of them are,
Easy on your bike.
Right.
Just go down the hill and not have to worry about it. You just don't know how you're going to stop.
and you have 2, right? Or did you?
I did the 3.
You did 3.
One's a
Yeah.
brand new one that's manufactured, and it's like one of the only new houses.
And
up
that's
there.
when Ed interjects about, and we know that we've got a guy, Terrence Teixeira.
Yeah, but that's already built.
So then you mentioned that Mr. Mortgage guy that we can get that bought and we can get a loan on that.
I have several vacant lots.
Right, we can talk about
Put those-
Terrell and
Yeah.
that.
So
Yeah.
sell it.
It's
And
interesting. I have 3 land listings in escrow right now.
Yeah, what?
3 land listings in escrow. Land doesn't sell very often at our
No,
house.
it's not in a long time, not since a downturn.
Yeah.
All right, ready? All right, we're ready.
Leaving the bull behind. It's Real Estate Jerky.
Hey, this is Ed Parcaut, mortgage advisor with Lending for Living, and I'm here with my good friend and realtor Betsy Hurst-Younger from Century 21 Wildwood up in Twain County. Betsy, now that we've gotten tax planning out of the way, thanks to Michelle, let's look at a couple of your properties. Can you tell us about a couple of the properties you brought?
No, I sure can. One of the beauties about living where we are in Tuolumne County is that we have area lakes, and we have lakes you can go water skiing, and we also have snow skiing. And right now we have only 2 listings available with active lake membership in Twain Harte. And Twain Harte actually has a community lake that's a membership only, and people have been going there for years and bringing their families, their kids. Now people are bringing their grandkids. It's a limited number of homes that can actually be members, and they have lifeguards. So
it's kind of like a golf course, a country club. You have a limited membership, right? Only so many members.
Right,
of it, so.
right. And they do that because of traffic and
Right.
litter and stuff like
Unlike
that.
Pinecrest Lake.
Correct, where you can barely find a parking spot sometimes.
All right, so tell us. Why don't you tell us about your listing?
Well, one of them's right downtown Twain Harte, and that does have lake membership, and it's only listed for $329,000. It's listed on. It's located on Motherlode Drive, and it's a 3-bedroom, 2-bath, all 1-level home.
Right, and if people don't realize, if you're going to move into this and want to live there, you can buy this USDA with 100% financing.
Correct.
If you want to buy it as a second home, you can do it for as little as 10% down, which is amazing. People think you need 20 or more, but you don't. It's very inexpensive. So there's many
Right.
different ways to purchase these properties.
And this one's walking distance to Twain Harte, which we have the wine festival, we have arts and crafts festival, we have lots of little events. We have concerts in the park every Saturday night. And that is during the summer. And 5 minutes away from there is another lake called Lakewood Lake. And just around the corner, walking distance to that lake, is a completely different home. It's 3 levels, and it is listed for $359,900. But it has on each level a bedroom, a family room, and it's like built for a large crowd, and
So for entertaining,
For
it's a great place
entertaining.
for having a party.
exactly, and the people that live there have actually lived there full time,
Oh, really?
and they love it, and they are going to relocate to a more level home because
They're older.
they need that. Yeah. And then we've also got another home only located about 5, maybe 7 minutes from Twain Harte, and it's a brand new manufactured home. And manufactured homes are more affordable, give you more options for on one level, It has a two-car garage attached to it, and it's located in Twain Harte Valley. And that one is at $369,900.
And that's on a permanent foundation?
It is on a permanent foundation.
Because you need, when you purchase manufactured homes, you have to purchase it on a permanent foundation. That way you can do a regular loan,
Right.
FHA, VA, that conventional type of loan on it. So that way.
Right. It's over 1,800 square feet, and right now it's staged, and they're willing to let some of the furniture be purchased with the property.
You see that a lot up there, though, right? When people are selling the homes, they don't want to take all the furniture with them. They just leave it in there.
Especially second homes.
Yeah.
Yeah. Exactly. And, in these areas, you can actually get high-speed internet. That's also important because people do go there on vacation, but they do also like to work.
Yeah, because at my place, I have HughesNet, which is really bad. Right? It's
Yeah.
You get your email. That's about it. If
Exactly.
You're lucky. Yeah.
So when we were talking about how manufactured homes are becoming a little bit more popular, we actually have these provided by a company down in Salida. But there are vacant lots that are available for sale and acreage parcels where you can actually put one, and it is more affordable to do that.
We did a show probably a month or so ago, and we had somebody on here, and that's what he does. He represents 5 different manufacturers, and he's been doing it forever, and it was amazing. So if you ever want to listen to it, it's on one of our podcasts. So and he's great for putting that stuff. If you don't like the places around here, he'll get the right place for you.
Right.
Yeah. So
A lot of them are actually manufactured up in Oregon
really.
and shipped down here.
Yeah, because we can actually take a piece of land, help you purchase the land, and do the manufactured home, and put it on there on a permanent foundation, all in one loan.
Right.
So,
and it seems like we have a mix of those that are available with public utilities, meaning public water and sewer, and then we have those that are available that need their own well and septic, and those are usually the larger parcels.
anything we need to worry about with those purchases, or tax lady?
Oh, no. Well, I mean, second homes, the interest on that is no longer deductible for federal, so that's
Well, I did not know that.
Yeah.
So that's why you need to hook up with Airbnb.
Turn it into a rental.
Turn it into a rental.
I'm gonna have to do that.
Yep.
Guess I'll be
Oh,
talking to my
that's
wife
right.
tonight.
That's right.
How many days of the year does it have to be rented out to be classified as a rental?
You can't
As
stay-
Airbnb.
You cannot be in it more than 14 days a year.
Really?
Yeah,
That's kind of hard to do.
it is.
So that's Christmas and Thanksgiving.
Do they have that on video? How do they know when you're there? It just seems funny to have a limit on the number of days you can use your place.
Yeah.
Well, that's
it's just the rule for vacation rentals. It's always been 14 days. You can't use it more than 14 days in order for it to be a rental
right.
property. So.
I have people that call and ask if they can camp on their property, if they can actually bring their motorhome up and use it as a second home. Is that allowed?
I don't know that answer. If they can put the motorhome on it, I know that like interest on your motorhome was tax deductible. So
As a second?
yeah,
Yeah.
Yeah.
I know. Well, and the other thing is,
Can you only be in it for 14 days? Or?
yeah, I was going to say our county limits how many times you can actually camp on your property.
Oh, really?
Yeah.
Yeah. Well, that's like how many times you can have a garage sale at your place, right? In the city, there's only so many times you can have it a year. Well, people push those numbers way past.
I don't know. I think we have some people that have them constantly.
Yeah, exactly. So, I mean, one thing I like about, which I've seen a lot lately, is more people are moving up to your area, Betsy, and living there permanently.
Correct.
Right? I mean, it was a way where people are like, oh, this is my second home. I'm going to go on vacation there. Now I see a lot more people who, one, can't afford maybe down here in the valley, right? Now they can go up there and they can buy a decent-sized home for, I mean, what's the smallest amount of home you can get up there right now? A couple $100,000?
Well, our median price is around 3.
Is it 3 now?
Yeah, but that's median. So we've got them lower than that. I've been showing properties. So this last weekend, I showed 7 homes that were under 200,000.
Really? Mm-hmm. Wow.
Yep.
Anybody I know?
No. I know. Well, and it's interesting because the market actually was slow in January all over.
Right.
And now it's picked up, and NAR actually predicts that is the National Association of Realtors, predicts that the second quarter and third quarter will see increases in home activity. But as the inventory increases and the interest rates still stay down, perfect time to come by.
Yeah. Now, do you know what the inventory is up there
Right now,
Yeah, I mean-
about 330 homes.
in Tuolumne County? Yeah. That's hardly anything.
Right.
What's that, a
Another-
1.5 month supply, if that?
Oh, no, I'd say more like 4.
Is it 4 months supply?
Yeah.
Wow.
Maybe.
Is that all over Tuolumne County, or is that in just the area when you're saying the 400?
When I
or
ran the
300?
list, it actually showed from Jamestown up to Pinecrest. It didn't actually include Don Pedro in those areas.
Really?
Yeah. We've had inventory as low as 190
When was that?
in 2005.
Yeah. And then you had inventory up to 1,200.
And the prices were probably twice as high.
Right. And then you had all the people, losing their homes and selling it again.
We still see some bank repos and a
Really?
couple of short sales. Yeah. I know. Surprising.
Well, it takes forever in some of the outlying areas to catch up with everywhere else. I mean, it's Bay Area happens there, then it comes into the Modesto, Central Valley area, and then it goes up Tuolumne County, correct? Basically, price-wise.
About 6 months.
Yeah. So basically, everybody who can't afford in the Bays coming into the Central Valley area, and then those people are being pushed up into Tuolumne County.
We say it rolls uphill.
Yeah.
Yeah.
So we got about a minute and something left. Oh, about a minute, I'm being told. So is there anything you want to say goodbye? Thanks for being here today.
I think I was going to tell you about a really cool contest I won.
Well, hurry it up. You only got
Okay.
about 20 seconds.
Really?
Yes.
Okay, I won 2 tickets to the Women Who Rock concert and 2-night stay and 2 flights because I put my card in a fishbowl.
Wow, that's good. Michelle, thank you for being here.
Hey, you're welcome. I want to clarify on one thing. I just looked it up. See, this is so many rule changes. The second home interest is not gone.
Okay.
It's still there. It's calculated in the 750.
All right, say
Okay.
your company's phone number real quick.
My phone number is 209-526-3091.
Betsy, say yours
And
real
I'm
quick.
Betsy Hurst-Younger, 209-604-2609. Text or call.
Hey, we're at the end of our show, and it always goes too quick. Michelle, Betsy, thank you so much for being here. Remember, you can always reach us at pound 250 from your mobile phone. Say the keyword Real Estate Jerky, and we'll be there for you. Now, next week's show is Mark Jensen of Jensen & Jensen. We're doing living wills and trust. Talk to you next week.